This is Kings and Queens accounting class. Welcome back. We are now will be proceeding to address the matters in relation to single entry and incomplete records. Numerous businesses across various countries referred to as small business, informal operations, informal businesses exist, and they do not carry on formal accounting with double entry system, preparation of cash book, preparation of what we refer to as the final accounts, trading profit and loss account, or income statement and balance sheet. But for some reason, at some point in time, they may need to formalize or to prepare a statement. They may need to formalize their accounting or prepare a statement for the government, or perhaps they want to borrow a loan from the bank and they are asked by the bankers to present a income statement or some financial statement to verify their business operation. As a result of that, they will contact accountants based on the information they have and ask them to prepare some statements or prepare some financial data or accounts for them. So it is called single entry because they may simply have a notebook that they are recording transactions, those things that are taking place in their business, simply by noting it in their diaries or in their notebook. All right, so they are making some entries, but it is not factoring both sides of the transaction, and that is why it's referred to as single entry. And there may be others again who have some, let us say, maybe operating a cash book, but that's all they have, their cash book, and that's all they're operating by. And so all the records are not available, and hence it is referred to as incomplete records. All records are not available. Now, it is the responsibility of the accountant now to take these information or records, bits and pieces of records that they obtain from these business personnel, and formalize it or create some financial statements that are usable perhaps to show to the government or to the banking institution for which the individual or the business owner may need to open a business, to really get a loan, in fact. All right, so single entry and incomplete records. There are a number of adjustments that are required in relation to this, but we want to pay attention to two significant things in this lesson to determine profit and capital, and we want to also explain or show the steps that one can take in treating with incomplete records or single entry information. So let us commence then on the process. In relation, so you will find that the records that you have, they may have a list of assets and so on, and they're asking you to determine, to work out their net profit, right? And to determine their capital. And in order to do that, it may require you to prepare what is known as a statement of affairs, right? You may need to prepare a statement of affairs. Same thing as referred to as the balance sheet, all right? So, to determine that, you are going to be recording all the assets, yes, and match it against the liabilities and then a calculation is done to determine the profit or the capital. All right. The second objective, when we are treating with incomplete records, yes. So the first attempt that you will make is to prepare a statement of affairs, as I said a while ago. A statement of affairs. Now, a statement of affairs, we use it to determine, again, profit, or we use it to determine what? Capital. Now, at times, the business owners, they don't know what is their capital at start or their equity at start, right? They're not sure what is their capital or equity at start. In order to determine that, then you have to identify all of the assets that they start with and all of the liabilities that they have at start to determine their capital, right? And we use the accounting equation, asset is equal to capital plus liability. So it is, if you want to find the capital figure, it is assets minus the liability equal to the capital, right? That is what is used in the statement of affairs to determine their capital. All right? Let's go on. In the next step of things, you would need to do an adjustment. You may be required to do an adjustment of the cash book. Right? You may need to do an adjustment of the cash book to determine the current balance on the cash book, whether it is the cash balance or the bank balance, right? So you would do an adjustment to determine that. Thirdly, you need now to make some adjustment to determine your purchases figure or your sales figure. And to do that, one will have to prepare a control account, prepare control accounts to determine sales, purchases, and sales. Fourth step, you may also need to do what now? Do adjustments to expenses. All right. You may need to do adjustments to expenses. And the fifth matter of consideration in dealing with incomplete records or single entry, you would have to take into account the depreciation. So you determine the matter of depreciation. All right. So these are adjustments that one will have to consider before you can move ahead to deal with, before the income statement is done and the balance sheet. So these are likely adjustments that need to take place in order to prepare the income statement and the balance sheet. Having said that, ladies and gentlemen, there is a question over here for S. Phillips. Yes, she starts business with $10,000 in the bank. She also had furniture at cost. When she bought the furniture, it cost her $9,000, but her book value is now $8,000. She had motor car, and the cost of it was $21,000. Present the book value now is $16,000. Her stock, which is $27,000. Creditors, $33,000. Cash in on $500. Or she has an overdrawn bank account of $10,000. Her debtors is $16,000. Loan, and they ask us to prepare the balance sheet as at July 31st, 2009, beg your pardon. So we're now going to prepare that statement prepare that balance sheet. So now, having ruled up the balance sheet, we're going to transfer the information from this question to do the balance sheet. So they gave us this information and we ought to find their profit. Okay, so with this information is intended to find their profit. All right, so we start with fixed assets. So furniture at cost, and furniture at cost would be 9,000. All right, we have a depreciation because the difference between the book value and the cost is the book depreciation. So we're going to less depreciation, and that is $1,000, and the book value is 8,000. Then we have motor car at cost, and motor car at cost is $21,000. We're going to less depreciation, and the depreciation figure, we subtract the 16 from the 21, yes, and we're going to get 5,000, yes? So it's going to be 5,000. We subtract that and we're going to get the 16 here. Okay, let's move on. So now we have dealt with both fixed assets. We're going to deal with current assets now. Our stock, and the stock figure in the question is 27,000. We have debtors, yes, same thing as our accounts receivable, which is 16,000. So we have our trade debtors, 16,000, and as this item, we have cash in hand. Cash in hand is $500. You notice that this is bank overdraft and not balance at bank or cash at bank. It is bank overdraft. So this is not an asset, it is a current liability. All right, so let us proceed. We will take the total for the three items. 7, and that is 13, 3, 4. So it's 43,500. All right, we're going to subtract now or less the current liabilities, yes. And we have used this, and we have used what else we have used? Cash in hand. So we're going to go to creditors now. Creditors is 33,000, so we have creditors 33, and we have what else we have? Bank overdraft. And bank overdraft is 10,000. All right, our bank overdraft 10,000. When we add this, we're going to get 43. We're getting 43,000. All right, that's the total current liability. We're going to subtract it from the total current assets, and we will get a figure of $500. This would refer to that $500 refer to as our working capital. We're going to add the working capital with the total of the fixed assets there. So that's 24. It will be 24,500. All right, let's continue. Our next move is we're going to less our long-term liability. And that is in the form of a loan that we have from CIMMYT. So loan from CIMMYT, which is $2,000. Record it here, 2,000. We're subtracting, and we're going to get a total of 2,200. Yes, 22,000 is it? 500. We can double line this now. And we're going to move to go to the section referred to as finance by. We are told that Phillips start the business with, we have used this already. We are told that Phillips, we have used this one, that Phillips start the business with $10,000, so that is her capital. So the capital is $10,000. All right. And we are told that he has joins, but normally we'll add net profit to which we don't know. Put a question sign there. When we add it, we get something that we don't know, and we're going to subtract our joins. And the joins figure is $30,000. Sorry, it should be $3,000. 3,000. The joint is 3,000. Okay? All right, so we're going to be doing some calculation now in relation to finding the net profit. Okay, so we are asked to find the net profit. So we're going to be calculating backwards. Yes? We're going to be calculating backwards, and I want you to see, so I'm going to work it out up here. So now we are going to start with the net worth, which is 22,500. Now we know the capital, we know the joins, but we don't know the net profit. What we're going to do is to calculate it backwards. So the idea is to add what you use to subtract and subtract what you use to add. Now we used to subtract joins, so we're going to add it. So we'll add the joins figure, which is 30,000. Instead of 3,000, it's really 30,000. So when we add it, we're going to get 52,500. All right. So we add what we use to subtract and subtract what we use to add. So the joins is added, it's a plus sign, we add it. And we are going to now subtract the capital. So we are going to, the capital figure which is 10,000. We're going to subtract it. Okay? When we subtract the capital figure, we're going to get a figure of 42,000. Right? 42,000. $500. All right. So this is our net profit. The net profit is 42,000. So I say the net profit is 42,500. So now we can remove the question sign and put in the 42,500. When we add 42,500 plus 10, we are going to get 52,500. When we subtract the joins of 30,000 from it, we are looking at a figure of 22,500. So, we would have determined the Mrs. Phillips profit for 2009, which is 42,500. What we have done is calculate backwards, starting from the net worth, which is the 22,500. We add the joins. We used to subtract it, so we're going to add it to it, then subtract the capital to get the net profit. So we do the reverse in our calculation. All right, so that is in relation to finding the businessman's profit using the balance sheet. We're going to now move on to look at other adjustments that I have showed earlier in dealing with incomplete records. Ladies and gentlemen, thank you very much. Our next lesson will show you how to treat with the other adjustments for incomplete records and single entries.